The millionaire next door drives a 15-year-old Honda. The person living in the mansion with the luxury cars is drowning in debt, and the Instagram influencer showing off a private jet, they rented it for 2 hours to take photos. This is the invisible wealth paradox, and it's destroying financial lives across the world. Morgan Housel spent a decade studying the behavior of the wealthy, not what they say, what they actually do with money when nobody's watching. And what he discovered will fundamentally change how you see every rich person you've ever known. Because the people who look rich are performing. The people who are actually rich are hiding. And the difference between those two groups determines whether you build wealth or spend your life chasing the appearance of it. I'm going to show you exactly how to spot real wealth, how invisible money works, and why the flashiest person you know is probably one financial emergency away from bankruptcy. This is the truth about money that authors hide. Before we begin, this video is for educational and entertainment purposes only. I'm reviewing a book and sharing insights about financial psychology. This is not financial advice. Always consult a qualified financial professional before making investment or spending decisions. Now, here's what you need to know about this channel. Most book review channels summarize. They tell you what happened. They give you the highlights. They recap the chapters. That's not what we do here. We expose what authors don't say explicitly, the patterns they hint at but don't name, the uncomfortable truths they bury in footnotes, the realities that would make their publishers nervous. If that sounds interesting to you, subscribe to What Authors Hide. Because today, we're deconstructing one of the most important books ever written about money. And we're starting with a story that will make you question everything you think you know about wealth. The story of a man who died rich, and nobody knew. Ronald Reed worked as a janitor for most of his adult life. He cleaned floors at a gas station, fixed cars, did odd jobs, never made more than minimum wage in any year of his working life. He lived in a small 2-bedroom house in rural Vermont, drove a second-hand car until it literally stopped working, wore the same jacket for decades, safety-pinned his coat when the zipper broke instead of buying a new one. When he died in 2014 at age 92, his estate was valued at $8 million. $8 million from a janitor's salary. The local hospital and library that received his donation were stunned. His neighbors were shocked. Nobody had any idea. Ronald Reed was invisibly wealthy. Now let me show you the opposite story. Richard Foscone was the vice chairman of Merrill Lynch's Latin America division. Harvard MBA. Made millions on Wall Street. Built a custom mansion in Connecticut. 18,000 square feet. Every luxury you can imagine. He borrowed heavily against his stock portfolio to fund the lifestyle. When the market crashed, his stocks collapsed. The bank demanded repayment. He couldn't liquidate the house fast enough. He declared bankruptcy. A Wall Street executive, earning millions, went broke. Morgan Housel puts these two stories side by side in Psychology of Money. And he asks the question nobody wants to answer. Which person understood money? The janitor who died with $8 million? Or the executive who made millions and lost everything? The answer seems obvious. But here's what makes this uncomfortable. Most people are trying to be Richard Foscone. They're optimizing for the appearance of wealth, the visible markers, the house, the car, the clothes, the status. And they think Ronald Reed wasted his life. They think he should have enjoyed the money, lived a little, upgraded. But Housel reveals something most people never grasp. Ronald Reed was richer than Richard Foscone ever was. Not just in dollars, in freedom. Because wealth isn't what you spend. Wealth is what you don't spend. And that's the invisible wealth principle that changes everything. Here's what Morgan Housel exposes in the book that most financial advice completely ignores. Wealth and rich are not the same thing. Most people use those words interchangeably. They're not interchangeable. They're opposites. Rich is current income.
Wealth is income not spent. Rich is visible. Wealth is invisible. Rich is the car you drive. Wealth is the car you could buy, but didn't. And this distinction is not semantic. It's the difference between financial freedom and financial imprisonment. Let me show you exactly how this works. Housel writes, and I'm quoting directly, "Wealth is what you don't see. Wealth is the nice cars not purchased, the diamonds not bought, the watches not worn. The first-class upgrade declined. Wealth is financial assets that haven't yet been converted into the stuff you see." Read that again. Wealth is what you don't see. This is the core insight of the entire book. And it's the insight that 99% of people completely miss. When you see someone in a Lamborghini, you don't know if they're wealthy. You know they spent money on a Lamborghini. That's all you know. They might own it outright with cash from a business they built. Or they might be leasing it at $3,600 a month with maxed credit cards and no savings. You cannot tell the difference from the outside, but most people assume the Lamborghini equals wealth. So they respect that person, they admire them, they want to be them. And that desire destroys financial lives. Because the path to looking rich is spending money. The path to being wealthy is not spending money. Those paths go in opposite directions. And here's where Housel reveals something even more uncomfortable. The desire to look rich is stronger than the desire to be wealthy, for most people. Because looking rich gives you immediate social validation. People see the car. They respect you. They assume you're successful. You feel important. Being wealthy gives you none of that, because nobody sees it. Your wealth is invisible. It's in index funds, in retirement accounts, in assets that don't photograph well for Instagram. There's no social reward for having $2 million in a brokerage account. Nobody compliments your Vanguard balance at dinner parties. But there is social reward for the watch, the car, the vacation photos. So people optimize for the visible, and they sacrifice the invisible. They buy rich. They don't build wealth. And this is the trap that Housel exposes throughout the entire book. The person you think is rich probably isn't. They're just good at spending money to look like they are. The person who is actually wealthy? You'd never know. Now let me show you the research that proves this invisibility principle. Thomas Stanley and William Danko wrote a book called The Millionaire Next Door. They studied thousands of American millionaires, people with a net worth over $1 million. Here's what they found. Most millionaires don't live in mansions. They live in middle-class neighborhoods. They drive American-made cars that are 3 years old on average. They wear inexpensive suits and watches. They don't belong to country clubs. You would never identify them as millionaires by looking at them. But here's the critical finding that changed everything. The people living in expensive neighborhoods driving luxury cars were usually not millionaires. They were high-income earners spending everything they made to maintain the appearance of wealth. The actual millionaires were invisible. Housel references this research in Psychology of Money and connects it to a deeper psychological pattern. The people who look rich are advertising. The people who are rich are hiding. Why are they hiding? Because once people know you have money, their behavior toward you changes. They ask for loans. They expect you to pay for things. They judge your spending. They resent your success. Invisibility is protection. But there's another reason wealthy people stay invisible that Housel reveals. They don't need external validation. And this is the behavioral difference that separates wealth builders from wealth destroyers. People who need to prove their success will spend money proving it. People who don't need to prove anything will save that money. Housel tells the story of a billionaire investor who was asked why he didn't buy a private jet. He said, "Because then I'd have to use it." Read that carefully. He could afford the jet. He didn't want the obligation, the maintenance, the crew, the lifestyle inflation that comes with it. He chose freedom over status. And freedom is what wealth actually buys, not things. Now here's where this gets really uncomfortable. Morgan Housel reveals that the biggest threat to building wealth is not your income. It's not the economy. It's not taxes. It's your neighbor. Because humans are comparison machines. We don't evaluate our lives in absolute terms. We evaluate them relative to the people around us. This is called the hedonic treadmill, and it destroys wealth. Housel writes, "The ceiling of social comparison is so high that virtually no one will ever hit it, which means it's a battle that can never be won." Here's what that means in practice. You make $60,000 a year. You see someone making $100,000. You feel poor. You want what they have. You get promoted. Now you make $100,000. But your new colleagues make $200,000. So you still feel poor. You make $200,000. Your friends are making $500,000. The feeling doesn't change. At every level, there's someone above you. And if you're measuring wealth by comparison, you will always feel inadequate. This is why CEOs making $10 million a year still feel the need to buy bigger yachts. Because the other CEO has a bigger one. It never ends. And the person caught in this comparison trap will spend their entire life chasing. They will never feel wealthy. Because wealth is not a number. It's a feeling. And that feeling is destroyed by comparison. Housel reveals that the only way to escape this trap is to stop playing the comparison game entirely. Define enough for yourself, and then stop. This sounds simple. It's psychologically almost impossible for most people. Because stopping means accepting that you won't have everything your neighbor has. It means accepting that someone will always have more. It means letting go of the status race. Most people can't do that. They'd rather spend their entire lives chasing and never arrive than admit they already have enough. And this is why the person you think is rich probably isn't. Because they're still chasing. They're spending everything to keep up. They haven't defined enough. They're on the treadmill. The person who is actually wealthy stepped off the treadmill years ago. They defined enough. They hit it. They stopped. And now they're invisible. Because they're not competing anymore. Let me show you the most important equation in the entire book. Wealth equals income minus ego. That's it. That's the whole formula. If you make $100,000 and your ego requires you to spend $110,000 to look successful, you will never be wealthy. You'll be in debt. If you make $60,000 and your ego is satisfied with spending $40,000, you will build wealth. Slowly. Inevitably. The variable that determines financial outcome is not income. It's ego. And this is what Housel exposes that most financial books completely ignore. Your ego is the enemy of your wealth. Every time you buy something to impress someone, you're paying an ego tax. Every time you upgrade because your friend upgraded, you're paying an ego tax. Every time you finance a lifestyle you can't afford because you don't want to look poor, you're paying an ego tax. And that tax compounds. Not in your favor, against you. Housel tells a story about a friend who bought a Rolex. Not because he loved watches, because he wanted people at work to see it. He wanted them to know he was successful. The watch cost $15,000. He financed it over 3 years. Housel asked him, "Do you think the people at work are impressed?" The friend said, "I don't know. Nobody's mentioned it." $15,000. For a reaction that never came. That's the ego tax. And here's what makes this especially painful. The people you're trying to impress don't care. They're too busy trying to impress other people. Everyone is performing for an audience that isn't watching. It's a game nobody wins. But the people who recognize this and stop playing, they win everything. Because they redirect the money they were spending on ego toward freedom. And freedom is the only thing wealth actually buys. Housel defines freedom as control over your time. The ability to wake up and do what you want. Work on what matters to you. Say no to things you don't want to do. That's what money is for. But most people never experience that freedom. Because they spent the money on a car, a house, a lifestyle. Things that don't give them control over their time. Things that require more work to maintain. They traded freedom for stuff. And now they're trapped. Working jobs they hate to pay for things they bought to impress people they don't like. The wealthy person saw this trap and avoided it. They kept their expenses low, saved the difference, built assets that generate passive income, and bought their time back. That person is invisible. Because they're not spending, but they're free. And freedom is invisible too. So if wealth is invisible, how do you identify it? Housel gives you the markers, the real signals, the things that actually indicate someone is wealthy versus just performing wealth. Here are the 5 invisible wealth markers. Marker 1. They have time. Wealthy people control their schedule. They don't rush. They don't talk about being busy as a status symbol. They have margin in their day. If someone is constantly stressed about time, they're not wealthy. They're trading time for money. That's the opposite of wealth. Marker 2. They don't talk about money. The people who are actually wealthy almost never discuss their net worth. They don't name drop their investments. They don't brag about returns, because they don't need to. The number is real. It doesn't need validation. The person constantly talking about their portfolio, they're insecure. They're trying to convince themselves as much as you. Marker 3. They say no easily. Wealthy people turn down opportunities that don't align with their goals. They don't do things out of obligation. They don't overcommit. Because they have enough. They don't need every opportunity. They can be selective. The person saying yes to everything is still climbing, still trying to accumulate, still afraid of missing out. Marker 4. Their lifestyle hasn't changed with their income. This is the most reliable marker of real wealth. If someone made $50,000 5 years ago and $150,000 now, but their spending is roughly the same, they're building wealth. If their spending increased with their income, they're on the treadmill. They're not getting wealthier. They're just spending more. Marker 5. They own assets, not liabilities. Wealthy people own things that generate income or appreciate in value. Index funds, real estate, businesses. They don't own depreciating assets financed with debt, cars, boats, designer goods. And this is the critical distinction. The person who looks rich owns liabilities. The person who is rich owns assets. You just can't see the assets because they're invisible. Here's what Morgan Housel reveals in Psychology of Money that nobody wants to hear. Building wealth requires being okay with looking poor. Not actually being poor, looking poor. Because if you're building wealth, you're not spending on visible things. You're saving, investing, living below your means. And people will judge you for that. They'll think you're cheap, boring, not enjoying life, wasting your earning potential. You'll drive a normal car while your colleagues drive luxury cars. You'll live in a modest house while your neighbors upgrade. You'll skip the vacation everyone's posting on Instagram. And it will feel uncomfortable. Because humans are wired for social acceptance. And looking less successful than your peer group triggers every insecurity you have. But that discomfort is the price of wealth. The person who can't tolerate that discomfort will spend. They'll upgrade. They'll keep up, they'll look rich, and they'll stay broke. The person who can tolerate looking average while building wealth invisibly will win the long game. 20 years later, they'll have the freedom everyone else is still chasing. But nobody will see it. Because it's invisible. And that's the final uncomfortable truth of this book. Real wealth is a secret you keep from almost everyone. Psychology of Money is not a how-to book about investing. It's a mirror that shows you why you make the financial decisions you make. And if you're honest with yourself while reading it, you'll see the patterns, the ego, the comparison, the need for validation, the fear of looking poor. Those patterns are what's keeping you from wealth. Not your income, not the economy, you. And the only way to fix it is to see it clearly. Morgan Housel gives you that clarity. He exposes the invisible game being played all around you. The performance, the debt, the emptiness behind the facade. And he shows you the alternative, the quiet wealth, the invisible assets, the freedom that comes from not needing to prove anything. If you take one thing from this video, take this. The person you think is rich probably isn't. They're performing, they're spending, they're trapped. The person who is actually rich is invisible. They're free, they're quiet. They don't need you to know. And if you want to build real wealth, you need to become invisible too. Now I want to hear from you. Which invisible wealth marker resonated most? The time freedom? The ability to say no? The unchanged lifestyle despite higher income? Leave a comment. Tell me which one you're working toward. If you're not subscribed to What Authors Hide, subscribe now. Every week we expose the truths that authors bury, the patterns they don't name, the uncomfortable realities they hint at but don't say explicitly. Next week we're covering Atomic Habits by James Clear. And the angle is this: your habits aren't the problem. Your identity is. If today's video changed how you see wealth, that one will change how you see yourself. I'll see you there.